stronger than expected. It looks like more people are returning to the workforce or looking for work. Thus, the unemployment rate ticked up from 5.4 to 5.5%. The wages also had an increase, which bodes well for the recovering economy. So things are looking up in terms of a U.S. economy that is on the mend, and this, of course, bodes well for the Fed being able to be more proactive in hiking rates sooner than later. I know that we all know that Yellen's very dovish, so she wants to see ample evidence of a truly improving economy. Whether you want to believe these unemployment reports and whatnot, it's a different matter. I think the Wall Street institutions they move in a herd. So if the perception is that the economy is truly recovering, you can say that the reports are false, but nevertheless, it's money is what moves the markets. And so if the institutions start to step in to a greater degree in the view, or actually step out to a greater degree in the view that rates are going to get hiked sooner than later, then we're going to see that reflected in the price volume action in the major averages. And of course, as my studies have shown, the first rate hike is actually a bullish sign because it shows that the Fed is confident enough to hike rates for the first time in some time because the economy truly has turned a corner and truly is on the mend. So that often marks the start of a big bull market. That said, markets often get skittish a number of months before the first rate hike because they're anticipating the first rate hike, and so that is a bearish event. Therefore, say for example, the first rate hike comes at the end of this year. We're right now about 6 months before the first rate hike, and we could start to see some market nervousness and some institutions starting to pull out. Right now, we're seeing that just today, we're seeing that the markets are attempting a bounce here, and they have been going sideways in tighter and tighter fashion, so that could be said to be a bullish, constructive price event for the markets. We have seen a number of actionable names rear their heads over the last several days. That bodes well for the market internals. So, in other words, continue to take advantage of these upside events in stocks. And meanwhile, the sideways market, of course, makes it nearly impossible to trade on a market timing basis. Nevertheless, it also means that you can take a longer approach and sit with the buy signal if you are in any of these ETFs. But I think the bigger money has been made, the more profits have been made this year in the individual names. Now, every week I've been going over a number of these names that look like they are extended. I'm not going to be a broken record here, and we have a number of these names that have proven out since they became actionable. A number of them, some of you are probably sitting on profits anywhere between 7 to, well, there's SKX. That has done very well. I think that's one of the best performing stocks we've seen over the recent period. It still is not doing anything wrong at all. But again, you guys all know the score with this stuff. If you've got a good profit in a stock in context with this chart, there's nothing wrong with starting to take some profits off the table. I mean, for instance, this SKX on the what is that? The 8th of May, it had 2 big up days, and in context with the pattern, it's getting ahead of itself. There's nothing wrong with taking some profits on that day, but then it tightens up, and it doesn't do anything wrong. It tightens up on lower volume here, so there's nothing wrong with actually reinstating what you sold on the 8th, buying it back, and then enjoying further profits in this name. Some of the other names have also continue to do well. Again, it's just you got to develop your chart eye, and that's why we do these webinars and we put out these reports so you can develop your chart eye as to when to start taking profits in context with the price advance in a stock you may own. Now, Outside of stocks, we're seeing the price of oil. Let's go to actually USO. That's the index I like to use. The price of oil is potentially, maybe it is signaling to us that it is hitting. It has made a low, an ultimate low, and it's now turning the corner. The Commodity Research Bureau pretty much traces the same pattern out, and so it is possible that if these reports are to be believed, the economy actually is on the mend, and therefore, since markets do correlate and economies correlate, perhaps that means that the big juggernaut China and some of the other countries are also on the mend. Therefore, the demand placed on various economies should increase if that is the case, and we should see that reflected in charts like various commodities and the price of oil and whatnot. It does seem like the price of oil, at any rate, is not accelerating to the downside. It actually seems to be attempting to find footing after its significant low that it put in mid-March. And the same again for a basket of commodities. They seem to be tracing out very similar patterns. Outside of that, you guys know the score on taking profits when you got them and keeping your stops tight. You can baby step your account higher, and what I mean by baby step is you got a 8% profit in the stock. Maybe you want to take some profits off the table. Hopefully, maybe if you played something like SKX, then you potentially have a much bigger profit. But then your account is edging it higher and higher by keeping your stops tight so that you're not giving much back when the markets start to hiccup. And they have been hiccuping a number of times this year. However, the corrections have all been contained to within 5%. And when the markets do correct, though, they usually lose their 5% in a matter of 3 or 4 days. So the sell-offs can be very vicious and can erase your profits completely in that span of time. So it is important to be taking profits and keeping stops tight. And with that, I'll turn it over to Gil.
Yes. It is a matter of being a quick draw McGraw type trader, which I'm happy to do if that's what the market's going to give you. But yeah, like Dr. K was saying, we're basically stuck in this range, and we've been really choppy here. The S&P breaks down through the 50-day. Now it's rallied back up to the 50-day. I don't know if we're going to turn higher. I've been thinking, though, that higher interest rates might be viewed as a good thing by the market. And so the strong jobs number, of course, brings that into play. The dollar went nuts this morning, but has since started to stabilize. Actually, let me check my quotes. It's pulled back a little bit versus the other major currencies like the yen or the euro. Of course, the euro's got its own problems with the Grexit on tap. It seemed like, I guess they missed a big, you know anything about this, Dr. K? They missed a big payment or something. But of course, they were borrowing money from the IMF to pay the IMF or something like that. So I'm not sure how that all works out. In any case,
same old proven record of trouble over there, so which the market I think
never really ends.
Sensitized to.
Does it ever end? Does it ever get resolved? Anyways, you're seeing some stocks acting okay this morning. I noticed the things that catch my eye right off the bat. Cyber, of course, coming up on what looks like it's going to be a pocket pivot. I'm not sure. Did they price their secondary offering? Dr. K, do you know?
On which one? Cyber? Let me see here.
I think all of the cybersecurity names.
Yet. Well, it hasn't gone live yet.
Yeah, so I think all these names, so they're all jacking on news of the I forget, the federal government getting hacked. But to me, all of that stuff is kind of getting old. Everybody knows that cybersecurity is a big issue. So you see this big reaction, and it's a news reaction. I think it tends to be temporary, but we'll see what happens. Right now, you got FireEye, which has been acting very well, and of course, this was viable down here along the 50-day when it was drying up, so it's moved higher. Fortinet is trying to come out of this range. Bounces right off the 20-day, which that's a nice reversal. Maybe you flash a pocket pivot in here, but it's basically been trying to move higher on weak volume and just kind of trending a little bit, slightly higher. So a lot of these names are acting okay, and BABA trying to come up to the 10-day. It's sort of stalling out right now. Market's stalling out a little bit. I'm still, I don't know, I'm a little on the fence here. I'm watching short sale targets, I'm watching longs, I'm trading things around. But for the most part, it seems like it's tough to make major progress unless you're doing things that are very unorthodox. The G Pro has worked out pretty well, and but it's been a little choppy. But you've had to be opportunistic with the name on the pullback. So give me 1 second here. Got some alerts coming through here, so just checking a few names real quick here. Noticing actually Facebook is kind of floundering around. You got this pocket pivot here. What's your take on this one, Dr. K? You a buyer?
No. Facebook, just this whole space is having a lot of trouble. And Facebook, the pattern is very damp and soggy and lackluster. And it's had pocket pivots before, and you can see what happened. I mean, nothing. I mean, it had a pocket pivot through its 50-day, but we didn't put that one on because it's just the prior pattern just does not look like this thing has any kind of juice behind it. And we want to be in leading stocks, and this is not displaying leading price characteristics whatsoever. Plus with a gap down in there. So I think it really needs to shore itself up, and the space itself needs to start showing some signs of life. Otherwise, I think your money is just dead money in this kind of stock.
Yeah, I mean, it brings to mind, whether these are becoming shorts. I'm not, I think if the market continued to rally, you might see this hit the 50-day, but you're getting a black cross. I'm actually short this thing right now, LinkedIn, using the high of the day as a stop. And so I'm looking for some downside from here. But this could help if you look at the weekly chart. And this is what I'm saying. This market is really a mixed bag, and there's a lot of different stuff going on. And I see targets on both sides of the market. But here you have a left shoulder and a head, and so the big break on the right side constitutes the right side of the head, or this big break off the peak. And now you're rallying back up. Now this seems to me like it might set up a possible peak of a right shoulder, and you see you already have a black cross with the 10-week coming below the 40-week. But over here you're just barely getting the cross with the 50-day below the 200-day. That's the black line is a 65-day exponential, which I use as another potential area of overhead resistance on rallies. But if you think about it, the stock is maybe what is that, 3-4% past the 20-day moving average right now. So it could roll over from here. And you're seeing the market, it's now up. Dow's up 0.67. We were up 30-something points just a second ago. So, to me it seems, again, it's just kind of choppy and unresolved, and it doesn't know what it wants to do. Are higher interest rates a good thing? Are higher interest rates a bad thing? Bond market's been getting whacked. I mean, it's just very inconclusive. Twitter's another one. You had this sort of descending wedge, and then it tried to break out yesterday, but it failed, which makes me think it may come back into play as a short sale. I actually was long it in here. I bought it on this day here and then sold into this move. You ran into the 20-day. Now, if I had any brains, I would have turned around and shorted it. But since I don't, I didn't. And the stock may reverse here. Sometimes if you're setting up in a bear flag, which I guess that's what you would call as a slightly descending bear flag. This is what it looks like on a weekly chart. But you can see, again, you may have, this could be a left shoulder. Here's your head. And logically, you might expect to see a rally to form the right shoulder, and that hasn't happened. So, I got to wonder whether it's just going to be a bear flag, and that'll be the extent of the right shoulder. And this was sort of like a shakeout to the upside, so an inverted or an inverse shakeout. If you think about this, if you flip this upside down and looked at it in a mirror, this would be a flag formation, and then a little shakeout down to the 20-day line, on the long side, if this was flipped over, would be something you might look to buy. In this case, it turned out to be something you probably wanted to short. And it looks a little weak here. The only thing about Twitter is there's all this babble about Google buying them, and I don't know whether that's really true or not. Dr. K, what's your take on it? You think Google would really buy Twitter?
Well, the Google guys are exceptionally bright about the space, and I think they're only going to buy it if it really is going to add symbiotic value to what they're doing. That's going to be the key. So, and in other words, Twitter has a market value of $24 billion, and Google, meanwhile, has a market value of $362 billion. So, a Twitter purchase would make sense only if they've got something in store that they haven't revealed to the press yet, where Twitter is actually going to increase their revenues above and beyond the price of Twitter. And again, we don't really have any color into what they're thinking, but that it really comes down to that. So there can be all this buyout rumors and things, but we have to understand why they're going to really find Twitter a compelling purchase for the company. And right now, I mean, maybe someone out there, if you guys have heard anything, but I haven't heard anything as to why Twitter is going to really increase its bottom line enough, to warrant the purchase. Right,
and some might say that Google will buy them a lot cheaper if they just hung out for a little while, because the stocks. One of the things you've got going on here to think about in a sort of a macro sense is that if interest rates start to rise, and we've already seen the bond market's already been raising rates, so the bond market knew what was happening. It's known what's happening for a while. So you're pushing to lower lows in here on the 20-year plus Treasury bond ETF, the TLT, and so you're already seeing rates raise on the longer end, and now you're going to see them rise on the short end. So usually what happens in a rising interest rate environment is that PEs won't expand, so the market won't tolerate these ridiculous PEs for stocks that are trading at 200 times estimates, and so names like LinkedIn. What is LinkedIn trading at on the estimates, Dr. K? You know?
Let me see here.
I think it's 111 times.
Yeah.
And then Twitter is, let's see. What is Twitter?
Twitter is 100.
So my point is that the market's not going to tolerate these ridiculously high PEs, and so that's why you'll see the PEs will start to contract, and then these things come in hard. So, I think if we go into a bear market or significant correction, you're going to see LinkedIn and Twitter come down a lot more. I thought, I'm watching the market now. We're down 25 on the. So here we are spinning around, and it's just kind of a crazy. Just crazy, ridiculous, wild movement. So, and I have to admit, these days I have more fun trading the currency markets, which seem to make more sense to me. I mean, yeah, they move big on news events, but you don't have to be in before the news event. You can wait and see how things play out. And Dr. K and I were talking about this before the webinar, that currency trading or forex trading, for anybody who does it tends to be more technical in terms of interpreting the price action. So the technicals seem to work a little more consistently than they do these days with the stock market. Anyways, Apple coming to some conclusions about high PEs. We might consider the fact that you have Carl Icahn out there just pitching the hell out of this stock and how it's worth $200. And what's interesting is that with all this amazing pitching from Carl Icahn, and he puts out research reports touting the stock and supposedly doing the math in terms of what they should be worth. And of course, he has a huge position, so I think that's a really convenient way to operate. Go long things and then use your big name and your influence to pump up the stock. But even with all that, it doesn't seem to be going anywhere. And what I see with this thing is you got a fair amount of selling in here relative to buying, say, from late April on. And so you had this big reversal on the breakout attempt that failed, so another breakout fails. And this kind of does what is typical for a big stock leader. It comes down into the base and finds some support along the lows. It violates the 50-day first, just to throw everybody off. Then it moves back up to the highs. And now it's sort of wobbling. And when I look at it on a weekly chart, you have some big selling here, and you're not really getting any big support. As you come into the 10-week line here, you have to ask yourself, is this thing going to hold? And to me, that's not really clear. And I definitely would be watching this because I think what you will see, if the market breaks down, Apple is going to break down. The two will work together or move together. And I think Apple basically becomes like a 3x or 2x or 3x NASDAQ 100 ETF. So like the SQQQ, for example. What is that, Dr. K? Is that a 2x or a 3x?
That would be the 3x.
Yeah, so that uses, the reason I would just short something like Apple rather than go long the SQQQ, and you might think about this if the MDM goes to a sell signal, is that with Apple it's basically 50% margin you got to put up, and the maintenance I think is 35. So overnight it's not using up a lot of your cash, and for that reason it's not eating up your margin as well. And so with the SQQQ they I don't know, make you have 3 times your cash or something like that for the position. It really screws up my margin, so I don't really like to go long something like that because you do have to go long a fair bit of it if you're going to make big money, and I find it just easier to pick on a big stock leader that might be breaking down. So, and Apple's sort of like that, but I'm watching this. You're down below the 20-day now, coming into the 50-day, so watching for a break. I think if you see that, it's probably going to coincide with the market coming in. Let's see, I'm looking for questions here. I don't see many. People must just be mesmerized. Somebody says, hindsight is so easy. Somebody says, one person saying, no sound coming to audience. I think everybody hears us fine. It's probably your own internet service. That's usually the issue. Let's see, how does eyes look to you with recent action? Well, I think it's pretty easy to figure out. I think it was a buy, and I talked about this I think over a week ago as it was coming up through here, and it's pulling back into the 50-day here. So it's buyable here. Now it's just trying to come up the right side of this base. It looks like that's what it's trying to do. And as it comes up, it runs into some resistance from here, and you're pulling into the 10-day. So, it looks like it's trying to turn. But for me, I bought it here, and I sold into the jack. And now I'm just kind of leaving it alone for now, let it settle in, probably tighten up, and then maybe it can go higher from there. But, we'll see what happens here. I'm still skeptical about this market. Mobileye is squirrely because it's not really, you're not really getting voodoo pullbacks here. You had one here, but when you come down to the line here, you do get support off the 50-day. But then you roll back over yesterday and volume picks up. I didn't like that. I actually bought some of this off the 50-day and sold into the move, and it's coming in. I'm not so sure what's going on here. This is what it looks like on a weekly chart. You can see you're down on the week with volume picking up. So I'm not sure what that means. Could be problematic. So, not everything's going to work, and if the market breaks down, you're going to start seeing more names run into trouble. So something to keep an eye on. Here's Facebook. Yeah, Facebook looking a little sloppy. I think at least with LinkedIn setting a high today at, what was the high? 216.93. That was actually a decent place to short. I actually was short it and then covered, got a couple of bucks on and then covered. It felt like it wanted to go higher, went long. It moved up a little bit, sold it and went short again. So I'm basically day trading this thing right now as I sort of feel it out, so to speak. Let's see, but we'll see where it ends up. The market's just still very erratic. Now down 19 on the Dow. Nasdaq's negative. Did it turn positive at any point?
Yeah, very, very briefly.
Very briefly. So again, it's like the market's trying to figure out what it wants to do here, and it makes it tough. You get Jackson stocks, and I think for the most part, you sell into the Jacks and look to buy on a pullback, and that's basically all I've been doing. I'm not trying to be a big trend follower. And I know there are some names that have worked out, and if you've been lucky, maybe you've owned names like Palo Alto Networks, say, and AMBA, and sat through it all. But, I would remind people that at some point you probably want to take profits and not marry a stock. I know that back in 2000, when we used to do the workshops for O'Neill, you'd always get a couple of people raise their hand that they still own Cisco and they're up 1,000,000% on the position, and it was trading around 110 or something like that back at that in that day. And of course, that's just because they were dumb and they held the stock, dumb and long, as we used to say. And I think the probability of doing that, you're gonna, in any audience of 700 people, you're gonna have a handful of people who probably own Cisco. If they're buy and hold types. But you can't really marry stocks because back then it was trading at 110, and even after all that, a decade and a half later, you're still at 28 bucks, and so you gave up most of that. So there is a time to sell everything. That's what Bill O'Neill used to say. There's a time to sell every stock, and if you've done well with somebody sitting with them, keep that in mind. Whatever your out point is. What's that, Dr. K?
Yeah, I remember. I think it's something I read from years and years ago. He said there's no such thing as a good stock, and I thought that's pretty compelling. The way he meant it is that you never fall in love with a stock, because all stocks will have their moments where they will correct substantially, if not go bankrupt altogether. And I thought, yeah, that was very compelling for me as a very young trader to understand that concept. And you could take it on to a more microfractal level, where which describes the way I trade during bull markets, where I will go full bore, full margin in on when the window of opportunity is open, but at the same time I know that this market uptrend is going to end, and therefore I want to be in cash to set out the fireworks when the market does have a correction of any magnitude.
Let's see, some questions here. We talked about Mobileye. For me, it's hard to get a handle on Mobileye here. If you want to try and buy it here off the 50-day and use that as your stop, that's doable, I suppose. But it has been a little bit sloppy. So that's what it looks like here. GoDaddy. Well, GoDaddy's up there. The place to be buying this, and I was talking about it down in here. The thing to be doing was buying it down in here. So now it's up there, and it's had a pretty decent move. That's not about 10%. From the 26 level around the 20 days, so you're up 10%. So you have to decide, is that something you want to take a profit in? Keep in mind, it's a thin little stock. It doesn't make any money. That looks great on the weekly chart, and if the market comes in, it'll come in hard. So, set your trailing stop or whatever and figure out what you want to do. But I think you had to be buying it down around 26. My experience with the stock is it's just way too thin. If I try to come in and buy 5,000 shares, I can knock it up 25 cents in a hurry, and not really into that myself. Did you look at Taser and Splunk on pullbacks last few days? Seems like you have not favored these. Seems like you don't really know what you're talking about, if you don't mind me saying so, but there's nothing really to favor here. They're just pulling back on light volume. Tesla, I liked it down here, so it's had a 20% move. Now I think it needs time along the 10 days, so I don't know if that's favoring it or not, but I don't think I'd necessarily be jumping all over it right here. It probably needs more time. That's my general view. And then Splunk, I think, is toast. You had a failed breakout, huge volume sell-off. I think this thing becomes a short on bounces off the 50-day that carry up into the 20-day, because it may be a late-stage failed cup with handle, or here's one pod-like thing that fails, and then here's another cup with handle, and that's failing. So my general take would be that this thing looks like trouble to me. So, the fact that it's out of favor seems pretty intuitive to me based on this failed breakout on huge volume. So, I don't marry stocks. Somebody says, Gil, I appreciate when you talk about your mistakes as well as good trades. Most of these services only talk about their perfect trades. Well, most services, I think, are bullshit in that regard. So anybody who's a good trader knows that you make a lot of mistakes. And there's a couple of things. I'm reading a book right now called Paradigm Shift. It's pretty interesting. It's a market psychology book. And the guy contacted us, he's going to send us a copy. I actually bought it for $8 on Kindle, which I think is a steal, because the book's pretty good and it encapsulates a lot of psychology in the whole game of trading from the mental side. And the guy was talking about how studies actually show that the more active traders are the ones who make the most money. People buy and hold, unless they get lucky, tend to underperform. And there's a very simple reason. If you have a system and you know that your system has a 70% probability of working, the only way you're going to make that probability work for you is by having enough sample sizes. You know, it's not an O'Neill study where you have 2 stocks and that's your sample size. This is trying to make your system work for you over time. And so the more shots you take, the closer you will get to that 70% probability. For example, you could do 5 trades and they all lose. That doesn't mean that your method has a 0% chance of working. What it means is that your methodology needs more tries. So that's why in Las Vegas, the casinos, they have betting limits. They don't want you to bet all your money on one bet, because if you score, there's always the off chance that you can score on one, but they know that over time the odds will work in their favor, and so they want you betting a lot, and smaller bets to them bring that. When you're placing a lot of bets over time, even if they're smaller, those odds work in their favor. So even in the stock market, you have to work your methodology. You have to take enough shots with it to make the statistics work in your favor. And I thought that was a very good point. And that's why I say I have to lose to win. I got to take shots. If I don't take shots, yeah, I may be wrong, and I'm okay with being wrong. Anybody's been married, and I think, whether you're a man or a woman, you get used to having to be wrong with your spouse just for the sake of keeping peace. But in any case, so it's not that hard for me to do. I'm good at being wrong. I've learned a lot from being wrong, let me tell you, a lot, particularly on the short side. And that's the beauty, I think, of having done this for so long, and I'm still here, so I've survived. And in that case, I've been able to pick up a lot of knowledge as a result of all the mistakes I've made. From your short selling book, for which I have much gratitude, someone says, I understand quite clearly the concept of the wedge where prices rising in volume falling. I'm not sure how to handle something like VIP's VIPS current chart where price is falling and volume is falling. Do you have any suggestions for how to play such a situation? Well, you don't, basically. I mean, if it's coming down and volume is declining, that may tell you that it's ready to turn and rally. So I think you have to start to look at this as, in this particular case, the way I would be looking at this is this does have a look of a head and shoulders, but you did come down and test the 200-day moving average, okay, and you bounce off of it on big volumes. You got some support at the line. Now as your retesting volume is drying up, so that's a white coffee and retest, and that may mean that the stock is going to bounce again. I think optimally it's probably shortable on bounces off the 200-day, either up to the 50-day or the 20-day. So you have to consider this in your analysis, but you definitely. This isn't something you play as if you were flat and now you want to go short the stock on this. That's not something you want to do. This, however, notice this rally off the 200-day. You see how it wedges and the volume declines for 2 days. You run right into the 20-day moving average and then you reverse on higher volume. So that would be where you'd want to short it. So anyways, Garmin short GRMN. I don't know, we should take a survey and see how many people want to be short versus how many people want to be long here. I'm kind of just laying back here, putting out a little bit on the short side here, but we'll see what happens. So far, no real love, but that's okay. Sometimes love takes time. Garmin, I went shorted here. It's already way down there. It needs to rally somewhere. I don't know. I see you're in a clear downtrend, but it's not in a spot where I'd be shorting it. You're kind of late on that one. Netflix. Well, Netflix just dried up along the 10-day moving average, trying to move higher. So it's just holding tight. If you look at it on the weekly chart, it's been very tight. Slightly wedging, though. Notice that? Just slightly wedging. So I don't know if that's bad or good. And I guess we'll find out. If the stock goes higher, it was good, the tight action. But on the daily chart, you can see it just pulls into the 10-day. and probably becomes viable along the 10-day, but not much going on outside of that. So CRI, someone's asking about Carter's. It's just going higher. So I think, where do we put a, you put a pocket pivot note out on this, Dr. K, right here?
Let me just check on the date. I think this one, yeah, there's been quite a few lately. So let me see here. Yeah, let's see. That was May 18th. So
Yeah,
we
so
had it
it's
on
up.
the list even earlier than that. It was about the midpoint of that sideways consolidation.
Yeah. So it's, it's up from there. Not sure what we're supposed to tell you. It's up 5%. Take your profit and run, maybe. I don't know. But it's up, it's holding up, so you're not going to buy it here. It's extended. EPAM pulling into the 10-day on very light volume. If you like the stock, maybe that's the spot to buy it. And of course, if you can pull that off, I think, if you buy it here and it doesn't break below, say, the low, then it works and it goes higher. You can pull it off, but it could pull into the 20-day. I don't know. Somebody says the book Paradigm Shift publication date is 1992. Yeah, I think it's still
No, it's a
relevant.
different one.
Pardon me?
Isn't that a different?
That's a different book. It's a different.
Yeah, the
book.
one just came out.
It's called Paradigm Shift. Let me see if I can figure it out.
The author is Yvonne Bayagi.
Yeah, hold on.
Byejee, and that just came out, and that's why he wants us to write a endorsement on the book.
Right. It's called Paradigm Shift. I'll get this eventually. Give me a second here. Great. I'm looking at it on my iPhone. How to do you have the? Hold on a second here. Yes, of course. Just search on any book that says Paradigm Shift, and that's the one, right? You got to kind of use a little common sense here, and you will figure out that.
Copyright 2015.
That would tend to be a newer book. Let's see. Whoops. What would you search under?
Just if you type in Paradigm Shift Amazon, it'll pop right up.
Yeah, so it's right in there. Give me a second here. Paradigm Shift, How to Cultivate Equanimity in the Face of Market Uncertainty by Ivan Yvan Biagé, Byeajee. So that's the book.
So
That other one doesn't have anything to do with trading psychology. Let's see. Anyways, where was I? Oh, questions. All right, what else is there? Baba. Well, I say, it's hanging out along the 10-day line. It looks like it's trying to go higher. Maybe it does. Maybe it doesn't. Volume drying up on the pullback. So, I think the time to try and buy was under 90. You could try and buy it along here. Could have a pocket pivot, or may just back and fill for a little bit. I think it really is going to depend on what the market does. And, the market seems a little bit slippery here. Anyways, add to SWKS here. What do we need to tell you what to do? What's it doing? It's broken out. It's pulling back to the 20-day on light volume. If you want to add, where do you add? You add on light volume pullbacks to logical areas of support. Is a 20-day moving average a logical area of support? Well, since it held it yesterday, it is. You know, it's not that hard to figure out. So, and I don't know if you're just phrasing it as a question, but it just strikes me as really dumb because what do we teach over and over again, and then you're asking us what you should be doing. I hope you're not doing that because I don't like it when people get into this. I'll get emails or tweets or whatever. People, should I do this with this stock? Or someone emails us and they ask us about. Someone was asking us about this one. They want us to tell them what to do with this stock. Looks like a piece of garbage to me, and I would say that their stock selection abilities are a little bit in question here. But, I don't like questions when people are asking us what they should do. We try to teach you how to think about things. And, I'm blue in the face from telling people what you want to do is you got a nice breakout, it runs up, you could sell into that 10% plus move if you bought it here along the 50-day, which is my favorite way of buying them when they're quiet. And then you look for a spot to come in when they pull into a logical area of support on light volume. It's really simple. Who's asking that question? Anyways, same thing here, pulling into the 10-day in this case with volume drying up. These things will go higher if the market turns. If it doesn't, they're going to fail and come in further. So what you're doing here, since you have no idea whether the market's going to turn higher, any of these things are going to turn higher, what you're doing here is you can test along here, you can figure out where your stop is, but I keep it very tight. And that's the beauty of this sort of pullback, is that it allows you to buy something at a point where you have a close by or nearby reference point for a stop. And that's what you want to do on these pullbacks. That's what I try to do. And then when they pop out, sell into the move. Everybody's buying that book. Well, we're already pumping up. That thing's probably sold more copies in the last 2 days since I tweeted about it, Dr. K, than it has since it's been out, I think. CMCM, Cheetah, Mobile. It's hanging tight along the 10-day moving average. So if you bought it down here, or down here, anything, this might be a secondary add point. So, but this smaller, thinner, isn't this a Chinese stock? Smaller, thinner Chinese stock?
Yes.
Yeah, so,
Yeah,
I don't know. Do you feel lucky? It's kind of extended. My take, if I bought it down here, I'd probably be selling. I mean, that's a huge move. I'd probably be selling it. Now you want to get all excited, or you saw this, and now you want to get excited about the stock here. Hopefully you already own it, because if you're looking to buy it here for the first time, you might consider the fact that it has had a pretty good run. Let's see. No more questions. Cuervo.
Yeah, the thing about CPM is that if you bought it back down there, you're fine to take the profits, because if this stock goes higher, it's going to issue some sort of actionable buy point, probably in the form of a pocket pivot. So if I had bought this at 25, I'd probably be selling it today, or I've sold it earlier on when it really got extended there. Went above 35, and then on the first day of weakness, I would have been selling it.
Kind of surveying the area here. And Trek's on. This one's pocket pivot right here, it looks like, and moving slightly higher. That may be one to look at. JD is definitely going to have a pocket pivot today, but it's a breakout. So if you bought it when it was quiet down in here on the pullback, it's coming out. Do you sell it? GoPro hanging along the 200-day. Somebody wanted to buy it yesterday just because it's tight, or it pulled back in the 200-day on live. Yeah, I see that, but it's had a big move. So I would think it needs some time along the 200-day moving average to get its butt in gear here. It's had a big move. So buying it down in here, you didn't have to buy this, but buying it down here when it got real quiet along the 20-day moving average in here was really the spot to be buying it. And now it's up here, and you're trying to find a place to buy it if you didn't buy it, because of course it has a right to go higher, doesn't it? Just because it moved higher from here, right? Not. JD, the ducks are quacking. Yep. When the ducks are quacking, feed the ducks. Let's see. Let's see what Tesla's doing right now. It's just hanging out. See, it's under the 10-day. It needs time. I think it needs time. Fake book. Whoops, that was the wrong one. Trying to hanging in there, but I don't know. I tend to think this one and LinkedIn and Twitter probably are shorts. Twitter is gonna. Oh, I'm losing it. Twitter. I think I'm Gloria from the Modern Family. Twitter. Anyways, Twitter. Probably goes lower, but the one thing that bothers me again are all these rumors about them being bought out, so. But I'm just looking around here and you see things that were getting whacked yesterday are bouncing back today. Let's see, Ambarella. Now Ambarella's kissing the 100 price level. It actually went to 100.83. So of course this brings it to mind Livermore's century mark rule. So my guess is it's a little extended for it to blast through it, but what do I know? Maybe it does blast through and go a lot higher. Maybe it doesn't. I don't know. But the 100 level seems to be resistance. Maybe it has to back and fill for a little while. Otherwise, it's possible that if we see the market get into some trouble, and right now that's not really clear. All it's really doing is flipping back and forth like a maniac. And if we see it get into any trouble, then the 100 price level might become resistance for this thing, and that would be possibly even a short on that basis, but probably a risky one. We had talked about XON already, had a pocket pivot the other day. Dr. K, what do you think about using FFTY to trade the MDM? What's FFTY? The IBD 50?
Okay, so yeah, there's nothing. All these things correlate, so there's nothing wrong with using that. Just know what your risk reward is in any ETF that you're using. And for instance, on this one, it's only been trading since April, but you can compare it. You compare its volatility. Say it had a pullback of 8.3%. Now that's twice what the Nasdaq pulled back. So you get a sense now that perhaps it's twice as volatile. So you can position size according to your risk tolerance profiles with that knowledge.
Okay, good answer. I like that. Amba, is it in a climactic stage? How do you know? You don't know. It's up, how many days in a row? Let's see. Well, at least 12 out of 15 or better over the last several days. Would you call that a climax top, Dr. K?
Well, climax tops to me are, I use them, it's a matter of semantics, and I have my own formula for what a climax top is, and no, that would not be based on my view of a climax tops. And also, even in a conventional way, I wouldn't call that a climax top, not yet. It is a potential mini top of some sort. If you're sitting in a position in this, you want to be unloading it and taking your profits because, on a weekly chart, how much longer is it going to go? So I don't necessarily have to sell the whole thing because it could have a little bit juice left in it before it goes into some sort of consolidation. But I'd keep your stops really tight on this one.
Okay. Any other questions? Short MNKD. Why? It's a $6 stock, and it has not had any real. This is not really the type of stock I would be trafficking in. So I would say that the fact that you mentioned this stock as a short means you really don't get it on the short side. So my suggestion would be that you need to read our books on short selling and get a clue in that regard. So because this is just kind of not even consistent with what I would be looking for. Yeah, I see that you want to see a head and shoulders, but it's just some junky little piece of junk. As most pieces of junk are, they're junky. But I don't. It's not something. It's not a big leader. It probably doesn't have a lot of institutional sponsorship. It's probably a bunch of putz retail types pushing it back and forth. That's my guess. So
Yeah, too
Let's
much
see.
volatility in the pattern.
Yeah.
Too much every. You want to keep the higher priced shorts as a rough rule of thumb. The stuff that's 50, 60, 70, hundreds of dollars. That's the stuff that's going to give you less noise in the pattern. But a very rough rule of thumb. Just stay away from the teenage and these single digit priced names. Whether you're buying, well, whether you're short, definitely when you're shorting. When you're buying, sometimes you can buy an $18 stock, but it has to be very liquid. For it to be actionable.
Yeah. And this is just not even in the realm of what we would look for. Under Armour is trying to flash pocket pivot today on a turnaround. So, maybe this is actionable here. You could check it out, I suppose. Any other questions? Say 24. Are we almost done? What do we got? Another 6 minutes, 7 minutes. Let's tour some more stocks. NXPI doing the same thing as SWKS, pulling back into the moving average here. So could be, these could be buy points. I mean, I think all of these, you're looking at SWKS, NXPI. To me, these are all candidates to be bought, and whether they work or not is another issue. But I think that if you do come in and take positions here on the voodoo pullbacks into the 20-day, notice this had a breakout here, and it's all the way back to the breakout point. But I think that's where your low risk buy point is. So if you wanted to get on it before and you missed all this, hopefully you weren't dumb enough to buy it up here. There you are. It's it's in your face. FXI, the Chinese market. Now, the Chinese market, I think, still has some issues, and my fear is that what happens here is that we see a real breakdown in the Chinese market. Dr. K, what's your take on what's going on in China? Do you think there's danger of a bubble bursting over there, and this FXI coming lower?
Well, as you know, as well know that it had that huge surge. The Shanghai market's been up quite extensively because the relaxed monetary policies there. It really wants to do its best to jumpstart its own economy. As far as bubbles, yeah, there's all these speculations on the real estate bubble, etc. But I'd like to see it in the form of the chart saying that something bad is right on the horizon.
Well, Dr. K, it's violated the 50-day moving average. Is that bad on the chart, or is that good?
Not on the chart, because it's a market that often does violate its own 50-day.
Okay.
So yeah, I mean, basically they have easy money policies over there that should be good for getting their economy turned around to some extent. But I mean, I'm not a buyer or a seller in this market because there's too many cross currents going on in China, and it's very difficult to predict. But I'm not seeing any horrible warning signs of, oh, this is going to be a bubble situation. I'm not seeing any evidence of that either.
Okay. But, my fear here is if we do see more of a correction in China, if there was a big correction in China, would that spill into our markets?
Yeah, I think simply because if China goes into a massive correction or even say a crash, it is going to upset the world markets because everything's tied together. And that means also that China's got some real problems and therefore exerts less demand on commodities, etc. There's a spillover effect. They buy less of our goods. So we don't want to see China have a serious crisis of 2008 proportions, certainly.
Just looking around, some of these other biotechs, this blue is acting well. Acorn, I think maybe a short. You could look at it as a head and shoulders up here. It's had a big move, shortable around the 50-day. This Kacher, we've been following this for a while. It's had several pocket pivots. It's continuing to actually push into all-time highs right here. GWPH got real tight and volume dried up along the 10-day line. There was I think there's a pocket pivot here, and it's continued higher. So some of these biotechs have actually done pretty well. Unlike Biogen, which is not looking so hot here, looks to me like it's a short on rallies up into this level. Celgene continuing to go lower, but now it's at the 200-day moving average, so that may engender some sort of a bounce here. Eyes, of course, we looked at, but it's pulling in, and it might be buyable off of the 10-day moving average. So if you want to take a shot at it and use the 10-day or the 20-day as your stop, I mean, you could use 1285 down at the 50-day as a stop too if you wanted to. RTRX is another one. Put it on here as a viable gap up. It's just continued higher. I mean, that was That wasn't hard to figure out. When you saw the Bible gap up, it just took off. You just buy it there. You had a chance to buy it here, and once something does this, and you pull into the low of the Bible gap up day, that's a very easy place to buy a stock because you've got a very close by reference for a stop. So, anyways, let's see. Somebody says, thank you for your time, even though we paid for it. Yeah, but it's dirt cheap, just so you know. I mean, I've seen guys who have these websites, they charge $900 a month, $300 a month, $75 a month, probably the cheapest I've seen. We're a bunch of whores giving ourselves away for what, $59.95 or something like that. So we're pretty cheap, I think. But we try to remain accessible to people in that regard by keeping the price relatively low. So, but you know, I see a lot of people peddling what I think is garbage and touting their track record and not being realistic about how difficult the market is and just touting their stuff like it's magic elixir. So, you know, maybe you should go subscribe there and pay them up the wazoo for not really much in my view. Let's see, what else we got going on here? Just touring data. Here it is, hanging along the 10-day. So it's up, it's down, it's up, it's down, and just hanging along the 10-day. Sedge. Everybody wants to buy it up here. It's risky because you had to buy it down here. Remember when I first talked about it as a ugly duckling buy right in here, and it's just continued higher since then and continues to move higher. And looks pretty good, but it looks like this on a weekly chart, which is sticking straight. So there's nowhere really to buy it now. And I think if you're buying it here, thinking you're going to get a move like you have from here to here, you're kind of pushing it. So I really wouldn't get into that myself. So anyways, somebody says, you are right, it is a bargain. Thank you. You're welcome. I mean, that's the reality of it. And I've seen a lot of stuff out there that's utterly, just like talking about utterly ridiculously overpriced. IBD's got a $695 home study course on short selling. Look, the reality is, you could buy the first book I wrote for Bill O'Neill back in 2004 on short selling, and then you could buy the new book, and you basically, for what, $60, you've got a 1/10 the cost, you've got your whole home study course on short selling. My suggestion is that's the route to go. You know, pretty little bags and CDs and colored workbooks and coloring books and all that, whatever. Just read the books, and I think you'll get a very clear idea of short selling. And to me, a lot of that goes on in the investment field, and it kind of makes me sick. A lot of stuff is pitched, and a lot of people price things. I think $15,000 for a seminar, you're just exploiting people. I'm sorry. That's my view. In any case, somebody says, let's have fun and do a webinar on trading other instruments like currencies and commodities. I've been thinking about doing a Forex webinar, just showing how I handle Forex markets. So I'm basically take a day trading view. I might hold some things for a short period of time, but not that long. You'll notice that anybody who trades Forex knows that you can get pretty big moves pretty quickly, and that's what you're laying for the most part. But I might do that. I don't know. I'm thinking about it. If I feel inspired, perhaps I will. In any case, somebody says, unfortunately, the paperback version of short selling has only black and white charts. Yeah, forget about the charts. Just what it talks about, reading the material and getting a sense of what short selling is all about. And then you can look at that book, read our new book, and get a sense of how that replaces a lot of what was in the old book. Okay? Somebody says, I am a gray hair, almost no hair, and I can tell you that I've learned more in the past 6 months than I have in years. You're welcome. My pleasure. That's what we're trying to achieve here. My view, our view is, right, Dr. K, is that we have a lot of experience. I think between the two of us, half a century, and we made a lot of mistakes. And to me, learning how to trade is about putting in the time, putting in screen time. In other words, tape watching, watching the screen and watching how things move and understanding how markets move. Look at the markets start to sell off now. And so you have to develop judgment over time. Now, there are a lot of lessons that can be learned much more quickly if we give you feedback or to talk about our own mistakes, and you sort of take that to heart, and it shortens your learning curve. And that's really our objective in getting people to think for themselves, because that's what we want. We don't want to create a website where you're dependent on us to tell you to move this way and that way. And I know a lot of them pitch that, don't think subscribe to our website and we'll tell you what to do and you'll make millions. It's easy. It's not easy. And that kind of stuff is just BS. In any case, you got anything to add to that diatribe, Dr. K?
No, I think we're good. I think you said it all.
All right, as always, right? Dr. K doesn't need to say anything because I'm usually saying it for him. Right?
Yeah, I think it works very well. I think, yeah, it minimizes the amount of inefficiency. So
Okay.
yeah, symbiosis is always good.
All right, very good. All right, everyone, thanks for showing up. We'll see where this market goes. I mean, frankly, I'm more leaning towards just sticking to trading currencies for a little while and let this thing sort itself out through the summer. But we'll see. Anyway, stay tuned, and we'll catch you guys next week. Take care.
Take care, everyone.